You can choose between various kinds of investments, including stocks, bonds, and cash. These categories are called asset classes, and how much you decide to hold in each is called your asset allocation. Your asset allocation may be the most important investment decision you ever make. That's because many studies have shown that the balance of different asset classes in your portfolio is a key factor of its performance. And according to some studies, it's even more important than the individual stocks and bonds you pick. A good asset allocation can help you strike the balance of risk and return that's right for you, based on your goals and your tolerance for investment risk. So how do you figure out your asset allocation? First, take into account that different asset classes have distinct characteristics. Stocks offer big return potential and relatively high risk. Bonds offer modest return and income payments, and they're usually less risky than stocks. Cash investments, such as savings accounts or certificates of deposit, are stable, but don't offer much interest or potential for growth. Now look at your time horizon, the amount of time until you'll need the money you're investing. Generally speaking, the longer your time horizon, the more it makes sense to hold in stocks, and the less in bonds and cash. Say you're investing for a retirement 30 years in the future. You might hold between about 70 and 100% of your savings in stocks. Your investments may suffer some big short-term drops, but you'll have time for stocks' growth potential to make up for them. And stocks have consistently posted gains over long periods. So the longer your time horizon, the less risky it is to invest in them. For shorter-term goals, you want to make sure that a stock downturn won't leave you short on savings just when you need it. So for goals that are less than 10 years or so in the future, you might want to hold most of your savings in bonds and cash. Also consider how you feel about the possibility of sudden losses. If a plunge in your account balance would send you running out of the stock market, consider holding a bit less in stocks than you would otherwise. Holding a smaller stock allocation will reduce your long-term growth potential, but it may help you sleep better at night. It also might help you avoid impulsive investing decisions, which tend to be counterproductive. Your goals, time horizons, and risk tolerance may shift over the course of your life. For example, if you have a child, get married, or enter retirement, check in on your asset allocation once a year or so, possibly with the help of a financial advisor, and make sure it still suits your goals.